What is up, YouTube? You are watching Robinhood App, How to Avoid a Disaster by bestinvestingapps.com. Today we're going to be talking about why your Robinhood app portfolio might be full of bombs, that's right, bombs, and how you can get back on track to avoid major problems in the event of the next financial meltdown. Plus, if you stick around, we'll give you a couple of surefire tips to get you back to basics, back on track, and avoid opening up your Robinhood portfolio to see some major red. Don't be this guy. I wanted to take some time out of writing investment app reviews in order to reach out to you all in the hopes that you will see the need for some discretion in our investing, especially using a great app like Robinhood that gives us so much good access to so many different options. Now, I was inspired to make this video when I saw someone recommending the security HDLV as a Robinhood buy for good returns on dividends, and it is a monthly 2x leveraged high dividend low volatility ETN. And the reason I'm making this video is because I suspect a lot of you don't even know what a 2x leveraged high dividend low volatility ETN is. An ETN specifically is an unsecured debt product that you can invest in. This one is 2x leveraged. That means that it borrows money in order to gain twice as much return, but it could also lose twice as much if the market moves downward. Specifically, the HDLV was launched on September 2014 in the underlying index as well, which means it's only been around for a couple of years. Because many Robinhood users haven't used Robinhood through a market downturn, I think a lot of people are overexposed. That means that I really suspect that people have bought into products that might not perform very well or could really explode in your face when the market decides to turn down. We've been in a bull market and everything's been trending up since 2008. If you've managed to buy something since 2008 that has trended down over the long term, you kind of did it wrong. It's a hero market right now. Anything is going up. So in this hero market, when I see people recommending things like HDLV to new investors who might not understand it fully, it worries me because of things like these disclaimers and these risks in the HDLV prospectus. You may lose some or all of your investment, and of course that's true with anything, but leverage risk. You're going to see double the returns or double the losses. Market risk and credit of the issuer. ETNs, they're credit-based. So if UBS, the issuer of the ETN, were to experience severe losses, it could become illiquid and might default. You would never see any of your money on HDLV again. And of course, that's not something to worry about when the market is going up, but if it chooses to go down, and it goes down in a big way, that could be the end of any money you have invested in HDLV. Just as a quick thought experiment, I did a little bit of calculation here on Brexit in June 23rd and June 24th of 2016. Now, HDLV and its underlying index haven't been around long enough for me to test it on a major economic crash like 2008, but on this tiny little blip of a day, HDLV, well, it declined about 10% when the market as a whole, as I calculated it from SPY, declined just a little less than 4%. And of course, I'm calculating here maximum drawdowns and not open to close values, but that means that HDLV is affected 256% more than the market as a whole. So in order for, like in 2008 when we lost 30%, HDLV would have lost 76%, which is more than enough to collapse any ETN. I made this video in the hopes that I could help at least one person out there avoid being invested in something that we don't understand or something that's not a good investment for us. I'm suggesting that perhaps we're buying stocks in Robinhood and other investing apps when we're really closer to maybe this part of the market. And in the future, there's a good chance we'll be heading down to the bottom of the market. If I'm invested in things that I don't understand or things that might be over leveraged, things that might be complicated debt products or debt securities, and the market starts to head downwards, it's anybody's guess what could happen. Now, complicated securities are, frankly, a great thing for a lot of people. If you fully understand what you're investing in and that's the right product for you, then please get out there and make it happen. For those of you who might be thinking to yourself, maybe he's describing me. Perhaps I own or am invested in some things that I didn't fully research or don't fully know. And it's even possible that you own some plain old simple stocks. Nothing complicated. But maybe you didn't research them fully. Maybe you just bought them because they looked good and you don't really know anything about them. What I'm suggesting is that in order to avoid bombs and disasters on our portfolios, we need to head back to basics. Let's get back to the basics and understand what we're investing in. Let's make sure that we fully understand fundamental analysis, technical analysis, ETFs, and mutual funds before we start jumping full steam ahead into things like complicated debt products and ETNs. After all, synthetic CDOs and all sorts of strange credit default swaps were a lot of what caused many of the most sophisticated institutions in the world in 2008 to collapse in on themselves after not fully understanding their own products. Here's my tip for you. Before you invest in anything, make sure that you fully understand exactly what it is you're buying. Let's be careful with our investing, have fun, and make sure that the things that you're investing in are right for you. If this video helped you or if you found it informative, please give it a share. We didn't give it a really catchy title that was keyword optimized, and it might never be a popular YouTube video, but if you can help us help other people, we'd really appreciate it. Share it with other investors, and leave us a comment if we helped you out. Give us a subscribe for more great investing app videos, and we'll see you next time. While we've been talking specifically about the security HDLV because it piqued my interest when it was mentioned in another Robinhood video, I wanted to remind you that all investments bear risk. I'll link in the description below to a great article that talks about all different types of risk and how they apply to different investments, even to what most people would consider risk-free, like government bonds.